PMI is a fee that protects the bank, not you. Here is exactly how to avoid paying it every month. In fact, the average homeowner pays around $1,200 per year in PMI premiums. If you're a first-time homebuyer, this video is for you. You'll learn what is PMI mortgage, how to avoid paying it every month, and how to remove it from your mortgage. Specifically, you'll learn how to make a 20% down payment to avoid PMI, how to use a piggyback loan to avoid PMI, and how to negotiate a lender-paid PMI option. What is PMI mortgage? PMI stands for Private Mortgage Insurance. It's a type of insurance that protects the lender in case you default on your mortgage. The cost of PMI can range from 0.3% to 1.5% of the original loan amount per year. For example, if you borrow $200,000, your PMI premium could be around $600 to $3,000 per year. How to avoid PMI 2026? One way to avoid PMI is to make a 20% down payment. This way, you'll have enough equity in your home to avoid paying PMI premiums. For instance, if you're buying a $250,000 home, you'll need to make a $50,000 down payment to avoid PMI. Remove PMI from mortgage. If you've already paid PMI premiums, you can request to remove PMI from your mortgage once you've reached 20% equity in your home. This can be done by submitting a written request to your lender and providing proof of your home's value. For example, if your home's value has increased to $300,000 and you've paid down your mortgage to $240,000, you may be able to remove PMI from your mortgage. Lender-paid PMI option. Some lenders offer a lender-paid PMI option, where the lender pays the PMI premiums on your behalf. However, this option usually comes with a higher interest rate. For instance, if you're borrowing $200,000 at a 4% interest rate, your monthly payment would be around $955. But if you opt for a lender-paid PMI option, your interest rate may increase to 4.5%, making your monthly payment around $1,013. Piggyback loan to avoid PMI. A piggyback loan is a type of loan that allows you to borrow a portion of your home's purchase price and use it as a down payment. This way, you can avoid paying PMI premiums. For example, if you're buying a $250,000 home and you can borrow $50,000 as a piggyback loan, you can use this loan as a down payment and avoid PMI. Now that you know what is PMI mortgage and how to avoid it, take the next step and calculate your PMI premiums using our free PMI calculator. Click the link in the description below to access the calculator and start saving thousands of dollars on your mortgage.